Hello traders, in the zone here. Got a lot of questions today, and so I wanted to do a short video about how to handle some of the A points and pivot ranges and that type of thing. Um, Let me go into, well, first let me just say today I got off to a bad start this morning. I saw that we came down to the top of the pivot range here, and we pushed up, and I chased and ended up taking about a $250 loser here. And so then I was able to make it back with a little bit more here and decided just to call it a day. But let me go over what these lines are. Okay, the white lines here, opening range, and this is the first bar. You can tell it's kind of a wide opening range. Also, we opened inside of value and inside of range. Okay, so whenever you open inside of value and inside of range, you can consider that you're going to go from value area high down to value area low, and you're going to probably stay within that value area as they're happy with the value. Okay, so not much opportunity. So when you have that, you want to look to fade the A's, okay, because if the market's opening in value and in range, then chances are it can't go anywhere. Okay, so today, once I saw that once the opening range is complete, I calculate my A points. Those are the yellow lines here, okay? And then I look to see where they are in relationship to other things, okay? The first thing I look at is the pivot range. Well, I knew that the A down was below the pivot range, and I also know that if you can push through the pivot range and confirm this A down, that's a very powerful signal, because you've got two things confirming. One is you had this supportive pivot range because we closed above this pivot range yesterday. This supportive pivot range fails. That's one thing. And then you've got a down that's confirming. That would be two things. Okay, and that's two signals telling you the same thing. And it's a very powerful signal. And usually you'll see a big move. Now, today I didn't think that we would get that because we opened inside of value and inside of range. That's telling you that chances are we're not going to be able to confirm this A down, okay, through the pivot. So that's one of the reasons why I knew when my first trade, price came down into this pivot range here, and I was looking for it to find support, and when it started to move up, I chased it. And of course, one thing I ignored was my moving average lines here. My fast had crossed over my slow, which is a sell signal. So, I'm not perfect. But anyway, I was expecting this pivot range to be support today, okay? And I was expecting price to push up and maybe push up to the A up, and this would be a good place to exit the long. So get long versus the pivot range and get out here. But the market was a little bit weaker than I anticipated, and we pushed down. We went through the pivot range. So the pivot range fails here, okay? But we come right down to the A down. Now this is your chance to fade, okay? Now this one was scary because you've gone through the pivot range. If you confirm this A down, then you have your powerful signal. But you have to weigh that against where we opened in value and in range, okay? So if you would have faded this, whenever I fade the A, I like to use an 11 to 15 tick stop, okay? And my first target is always going to be the bottom of the opening range, okay? And here we even had price close back into the opening range, but it couldn't push any higher, okay? So this would be your first target, would be the low of the opening range. And then, okay, price went sideways for a while and then rolled over again, came back down to the A down again. Now this time I would not fade this A because it's the second touch, and you don't want to fade the second touch because it's a high probability that it's going to fail, and so you only want to fade the first touch, okay? And so this one actually offered a great trade also, right back up to the opening range. I did not take this again because I didn't want to have a late day A confirmed down, and then we pushed down. And my moving average lines here, you can tell, we're in a sell. So I really didn't want to fade this one, although it worked. Okay, so you had two fades of the A here that worked, and then again here later on at the close. It came back down here to the A, down again, but again pushed back up. And all these pushes back up here are because we opened in value and in range. Now, that's no guarantee, and sometimes you'll find that some of your biggest moves happen when you have a situation where you opened in value and you opened in range, and then it does go through a pivot range and confirm an A down, and then you see this monster move. And that monster sell-off would have been because everybody was expecting a push back to the mean, a reversion back to the mean, and it catches them off guard. And so you never want to fade the second attempt or the third, although today it's proven me out, to be a liar, that it held. So also one thing, let me point out another thing too here. This green line here and this red line down here, this zone is the lower zone of the Camarilla. This is a supportive zone, okay? Up here, between this red line and this green line, this is the upper zone, okay? And this would be a resistance zone. And of course, in the middle would be the value area of the Camarilla. So another reason to fade this here, especially on the first touch, is that you came below the L3 and now you're trading back above the L3. It found support in this zone and pushed up. Now, this was a wide zone, so this wasn't much of a push down into that zone. So just pointing that out. But again, this L3 zone here found support, all three times, along with finding support at the A down. All right, that's all I wanted to do, is just point that out today. Hopefully that answers a lot of your questions, and that's going to do it. And we'll. Let me point out one thing before I go. You can see that my Camarilla lines for today, and then these Camarilla lines are going to be for tomorrow, and you can see that we have a 2-day overlapping lower. Okay, so we've got H3 to L3. This is the value area, and you can see that the L3 is below the L3 for today, and the H3 here is lower than the H3 for today. So value has been pushed down slightly lower. It's overlapping lower. Just wanted to point that out as an extra nugget. Okay, guys, that's it, and we'll see you later.